Whether you are an existing business owner or you're planning on starting a business, one of the most important things that you can do for your business is have the right business bank account set up for the business. So, in this video, I am going to break down how we set up our business account for our current business from where we were at our first dollar all the way through when we had our first $1 million in cash hit the account, not contracted revenue, physical cash from sales that actually were processed through this bank. What I'm going to recommend you do, which is exactly what I did, was go into the bank and go into the actual branch. And by the way, it can be a branch, so it can be a bank, or it can be a credit union location. Either one of those. The whole point of this is you want to have a physical rep that you can speak to, preferably a business banking expert at that location that you can direct them on how you want this set up. So this is the exact flow that I used when we were first starting out. The first accounts that I had them do, or at least open up for us, was the revenue accounts. Now, in this revenue account, it's exactly what it sounds like. Every single dollar, every single sale, every single transaction that we closed, money that came in through the account, first flowed through that revenue account. Now, I want to put like a little pause here, a little caveat, is that it's not 5 different banks. Like sometimes people think, hey, it's 5 different bank accounts, so it's 5 different banks. Think of it as like subcategories, almost like an umbrella or like a stream from where the main account is going to flow into the other accounts. So kind of keep that in mind. So if it's just Wells Fargo, for the purpose of the example, it'll just be Wells Fargo. If it's Bank of America, it'll just be Bank of America. If it's Chase, it'll just be Chase. Don't overcomplicate it because that's not the point of this video. So the first account was the revenue account. So every single dollar, every single sale that came in went through this account. The second account that ended up connecting to the revenue account, which is the way that I instructed the business banker to open it up for us, was the expense account. This is going to be so important because if you're anything like me, then I want to see how much money we actually have at our disposal that we can use, that we can save, that we can reinvest, that we can redeploy, reallocate, whatever it is. And so if I see on there that it's $20,000 in the revenue account, but in the back of my mind, I know, wait a minute, there's contractors that need to be paid out. There's vendors that haven't been paid. There's supplies that haven't yet hit our account. I still have like a $15,000 credit usage that I haven't paid down the balance on. Then I know it's not actually $20,000. So one of the things that I would use, or at least that I used, that I would recommend if you're anything like me, where I want to know exactly how much money I have that we can use, is all the expenses that were categorized. So contracts or contractors, vendors, any type of supplies, any type of recurring services that it's just a cost of doing business. They were funded through the expense account. And so if I knew $15,000 had to go out, let's say for this month's expenses, for even if it was on a credit card or again, just directly to a vendor, I automatically had it transferred out from the revenue account into the expense account. So for example, if we had 20K that came in that month and I knew that 15K was going to go out, then my revenue account for that month was reading 5K, but my expense account was reading 15K. Really quickly, if you are a small business owner who's looking to take advantage of business credit for your business, but you need a simple funding setup installed into your business, I would love to connect with you. You can check us out insideinnercircle.com. That's literally what we do day in, day out. Whether you are a brand new startup or an existing business, we put systems into place that allow you to get access to business capital at every stage of the business, not just where you're currently at right now. Now, the third account that I had set up was a savings account. So if you're keeping score, we have the revenue account, we have the expense account, now we have the savings accounts. Now, this right here is going to be at kind of like at your discretion, depending on how much you want to save. If maybe you're just starting out, then odds are you may not be able to save that much. Maybe if you have a little bit more time in business and now you're at the point where now you're at maybe $50,000 a month, $100,000 a month, maybe $250,000 a month, and you can account for maybe a bigger, what we say, like piece of the pie to go into your savings, then at that point you can play around with different ratios. You can maybe set aside 10%, 15%. If you want to get more aggressive and maybe you have low overhead, you can say, hey man, we're going to be setting aside 20% that's going to go in from the revenue accounts into the savings account. One thing that I will recommend, which is something that worked for me, is I like to be able to sleep at night. So apart from knowing, hey, this is how much money is in our revenue account, and knowing, hey, these are the contractors and the vendors that are going to be getting paid out, I also want to feel good knowing, hey, if we have a slow period, cash flow dries up, contracts aren't coming in as fast, maybe one of the net 30s got extended out to a net 60. Hey, we have 3 months of reserves in this account. Hey, we have 90 days of reserves in this account, plus maybe a 0% business credit card or two that we can float some of these like lagging costs over through. My whole thing, especially in business, is peace of mind, because when you have peace of mind, you're able to make better decisions on behalf of your business, and you're able to become the business owner that your business needs at every stage. The fourth account that we had set up was the tax account. Now, this is the piece right here where a lot of people kind of, you'll start getting different advice on YouTube, or depending on who you ask. Don't take this as advice. This is just what my CPA told me to do for specifically for my business, for where we were at. So I always advise, hey, speak to your own CPA. But one of the things that they had us do is they said, hey, set aside 20 to 25% of whatever's coming in top line just for taxes, even if you don't have to use all of it, because obviously they're going to go back in there. They're going to help clean up any deductions. They're going to go back in there and they're going to help you maybe itemize anything that you can use to offset your tax bill. Again, this is always going to be case by case. We get this all the time in the comments. How much should I set aside? How much should I set aside? It's going to be case by case, depending on your marital status, how much money you're bringing in, how long you've been in business, where you're located at in the country. Like somebody setting aside 20, let's say 20% on taxes is going to be totally different in Florida, or even let's say in Georgia, is going to be totally different from someone setting aside 20% in California if they're generating, let's say, $3+ million a year, as an example, right? But a good rule of thumb, 20 to 25%, same thing that's coming off the top line. So out of that revenue account, if 20 G's came in, let's say 20% of that is 4K automatically going into the tax account. And the fifth and final account that we had set up is one that I kind of merged together. When I originally made this video, I kind of had them separate, but now I merged them together, which is more so how we tend to operate a little bit more now, which is the reinvesting / experimental account. Now you can still keep these separate depending on how much revenue you're bringing in. But the reason why I had these merged is because the way that I run my business right now is we use a business credit card for all the transactions. So you can set up virtual cards essentially to monitor all of your transactions, but they're all linked to your expense account. And they're all linked to maybe the reinvesting account if maybe that purchase was for reinvesting or for experimenting. So Irv, what exactly is like reinvesting in your eyes? Again, in my eyes, reinvesting is, are you reinvesting into you, the growth of the business owner, maybe your leaders, maybe you wanted to set up a retreat for you and your team, maybe it's you and your admins and maybe two maybe employees, but you want to have like an all paid for training that you guys go out, fly out, you maybe pay for everyone's stay, you pay for everyone's meals. You can have that maybe as the reinvestment account that you're having set up for situations like this, where you're growing the business, you're growing the company, you're growing the people. Or if it's for yourself where, hey, I want to go out to the seminar, or I want to pay for this course, or I want to go out and I want to get certified in a specific area. It's going to be $2,000. Guess what? That money is sitting in your account so that you can go ahead and use it for the growth of the company. And by the way, if you're not growing as a business owner, neither is the company. So always keep that in mind. If you have no place to invest in the business and you say, well, the business is good right now, I promise you, there's always a place that can have funds allocated toward for continual growth. Now, I want to kind of let this pendulum swing the other way and close it out with this. If you are maybe in a place where you want to test certain things out, so maybe there's like an ad angle, or maybe there's like a specific marketing piece or demographic that you want to target, or maybe you're trying to test out brochures, for crying out loud, and you're thinking, hey, we want to test out the green brochures versus the red brochures to see which one hits better with our audience when we go to mail them out. Guess what? You have the funds in that account that you can use to experiment. Another way that you want to look at it is, I'm okay with losing the funds that are in this account because it's a learning experience. I'm gathering data. So it's technically never a loss if you see it that way. So those are the 5 accounts that I essentially had set up in my own business from 0 to our first $1 million. Again, you can restructure it however you like, but I at least wanted to share that experience with you so that you can pull from that whatever you need for your own business. If you found value in this content, consider sharing it with a small business owner who you know needs to set up their business bank accounts this year. But other than that, I appreciate you guys watching us. Until next time, everyone, I'll see you in the next video. Bye.